Hello everybody, in this video I'm going to be doing a brief stock analysis on Campbell's, and this is not by any means going to be a deep dive into their financials, but more so me giving my general opinion on the company and the outlook for the industry. So now I'm going to take a look at Campbell's 5-year chart, and I like to do that because I generally take a look at stocks from a really long-term growth perspective, and the 5-year chart for a growth perspective is not too great, but Campbell's is really not a growth company, so it's really not the worst thing. You see it at about $47 5 years ago, and then it's currently at about $52, so really not any growth there. And then here we're taking a look at the 6-month chart. So if you take a look at the end of March there, the stock dipped down to about $41 from its previous high of $57.50. So not being nearly as affected as a lot of other stocks that got halved or far less than their previous highs. And that's really because Campbell's makes a lot of staple products, and Campbell's was especially affected because they make a lot of canned soups especially, and people were buying up a ton of canned soups. So a value investor that was previously interested in Campbell's may have picked it up during that March period thinking their sales are going to go up. Taking a look at their revenue and earnings year over year for the last 4 years, I was actually pretty surprised to see their revenue increasing by such a dramatic amount over the last 4 years, or over the last 3 years, sorry, but also that their earnings are so variant from year to year. I would think they would have really steady earnings and revenue because they're not really opening into a ton of new stores or doing any crazy kind of things to their margins. They're always trying to improve margins, of course, and they're kind of the industry leader in that, but nothing drastic is happening. So I'm pretty surprised to see their earnings be so different from each year to year. And I also wanted to take a look at General Mills, which I would consider to be their biggest competitor. Campbell's is kind of a tricky one to say their competitors. You could also say Blue Apron is one of their biggest competitors, but taking a look at General Mills here, their 5-year chart is a little bit better just because they're slightly better than they were 5 years ago. And they also have a little bit better of a dividend. Here you can see that Campbell's currently has a dividend yield of 263. Whereas General Mills has a dividend yield of 303, and I think General Mills, in my opinion, has a little bit better growth perspective as well. So in this case, I would probably say that General Mills is a little bit better of an investment. But even so, these aren't typically companies I would like to invest in. I typically like to invest more heavily in tech or companies with a lot more growth perspective than these companies have. But if you are a value investor, I suppose, or just an investor looking for a really safe dividend stock, these both are probably pretty safe bets. Now I wanted to take a look at a few points by the bulls and the bears by analysts at Morningstar. The first point is that removing excess costs should afford Campbell's to fuel for brand investments, and they did that with nearly a dozen brands that's generated $100 million in sales each year. So that's also really, really great for food or beverage companies to constantly be investing in new brands, so they're going to generate more and more revenue. So that's definitely good to see. And then going into the next point, in contrast to its peers over the past few months, Campbell's hasn't taken its foot off the gas as it relates to marketing. So if they're spending more on marketing, that's going to generate more revenue, especially when their peers are not spending as much on marketing as they tend to. And then just the last positive bullish point I have here is that with the addition of Snyder-Lance, about half of Campbell's sales result from the faster growing on-trend snack aisle. And when I picture Campbell's, I typically just picture a can of soup, and I think most people do, but they are making a ton of money from this fast-growing sector in snacks. And now I'm going to take a look at a couple of bearish points by analysts at Morningstar, and both of these first 2 points I don't know if I necessarily agree with. The first one is that increased labor and sanitation costs to stem from the spread of COVID-19 could hinder their ability to meaningfully drive margins. And I mean, I think you could say this about any food or beverage company, or really any manufacturing company in general. So not a really great point against Campbell's right now. And then the second point, similarly, in our view, the added costs associated with improving their health profile by removing artificial flavors may improve their impede their margins. And again, this is an argument you could say about just any one of their competitors. So again, not a strong argument against Campbell's. And you could definitely say that they have more artificial flavorings and colors than other companies, but still just not a very strong argument in my opinion. And then the third point is that Campbell's failed to secure promotional shelf space during the all-important soup season of the leading U.S. retailer in fiscal 2018, which I believe is Walmart, which decreased their soup sales 14% for the year. And if you're just looking at 1 year, that's not a huge deal. And I think we saw that in their revenues for the year as well, just a minute ago. But again, just for 1 year as a long-term investor, I don't think it's a big deal at all. But if it was 14% soup sales decreasing year over year, then that's going to be a huge problem for the company. And now I just wanted to take a look at their research report overview. They were given 3 out of 5 stars and a wide economic moat, and it's because of their operations. They're able to do things at a large scale for cheaper, and also their brands. But I'm really surprised to see that because I feel like there's so many companies that are given no economic moat or a narrow economic moat that have great operations and a really strong brand. So I don't really know how they choose the economic moat on here. It doesn't seem to really be reliable across different sectors. And then they were given a fair value of 48.50, uncertainty medium, which I would say is not really true. I mean, pretty low uncertainty unless you expect their sales to continue or to decrease. And then stewardship standard, which I would agree with. I think the company could do a lot better at either increasing their dividends, which could be expensive, or doing share buybacks like Home Depot or Microsoft or a ton of other companies out there, because they don't have a lot of growth. So they should be doing one of those other things to make the stock more attractive to investors. So in my opinion, it's not really a buy, more of a hold or a sell, unless you are an investor just looking for a really safe dividend stock. Anyways, I hope you enjoyed the video. I make tons of other brief stock analysis videos very similar to this one, so be sure to come and check those out, subscribe for more content, and thank you so much for watching.